The Portuguese puzzle. Is economic daylight fading in 2025? Has Portugal's economic sun begun to set? This is a pressing question in mid-2025. Many believed the worst was over. Recovery from past crises seems steady. Now, new doubts are starting to emerge. Growth appears to be slowing down. Is this a temporary blip, or a sign of deeper, troubling issues? We need to look at the facts. The data holds important clues for us. The mood in Lisbon feels different now. There is a palpable sense of unease. People recall the difficult austerity years. They worry about a potential repeat. The vibrant tourism sector shows some strain. This was once a reliable growth engine. Now, even it seems less certain. The global economy offers mixed signals. Portugal is not immune to these trends. Understanding this context is truly crucial. Remember the optimism of the late 2010s? Portugal was often hailed as a success. It managed to bounce back impressively. Smart policies were given much credit. So, what has changed in recent years? Why does stagnation loom on the horizon? These are not simple questions to answer. Multiple factors are likely at play here. Vital signs. Check gauging Portugal's economic health. First, let's consider gross domestic product. GDP measures a country's total output. Think of it as the economy's size. In 2025, Portugal's GDP growth is weak. Projections show it barely moving upward, perhaps just around 0.5% this year. This is far from a healthy rate. It signals very little economic expansion. Businesses are not producing much more. New wealth generation is quite limited. Next, we look at unemployment figures. Unemployment in Portugal remains a concern. It might be hovering around 7.5%. While not at crisis levels seen before, this rate is still stubbornly high. It means many people cannot find work. Young people are particularly affected by this. They struggle to start their careers. This has long-term social consequences. A stagnant economy makes job creation hard. Inflation is another important indicator. This measures how fast prices rise. In 2025, inflation is around 2.8%. This is higher than some might prefer. It means the cost of living increases. If wages do not keep pace, people's purchasing power will fall. Basic goods become much less affordable. The human cost when numbers don't add up for people. Economic numbers can seem abstract. GDP figures sound distant, impersonal. But they have real-world consequences. Stagnant GDP growth means fewer opportunities. Businesses hesitate to expand their operations. They are reluctant to hire new staff. This directly impacts job seekers. Wages may also stagnate or fall. People feel their progress has stalled. A sense of frustration can easily build. High unemployment has a deep human cost. Losing a job is devastating for families. It brings financial insecurity and stress. Young graduates face a tough market. Their skills might go unused for too long. This can lead to a brain drain. Talented individuals may choose to leave. They seek better prospects elsewhere. Portugal loses valuable human capital. This further hampers future economic growth. Persistent inflation erodes living standards. Even a moderate rate like 2.8% bites, especially if incomes are not rising. The price of groceries goes up. Rent and utilities become more expensive. Families find it harder to make ends meet. Savings can quickly dwindle away. The dream of a better future fades. Section 4. Mirrors and memories. Portugal's path in a wider world. Portugal's current struggles are not unique. Many European economies face headwinds. Global uncertainty plays a significant role. Trade tensions and supply chain issues linger. Geopolitical events create further instability. However, Portugal has specific vulnerabilities. Its economic structure presents challenges. A comparison with neighbors is useful. Spain, for example, might show slightly better growth, though it also faces its own problems. Looking back, Portugal has seen this before. The Eurozone's sovereign debt crisis hit hard. Portugal required an international bailout. Painful austerity measures were implemented. The recovery was long and arduous. Those memories are still fresh for many. The fear is a slide back towards that kind of economic pain. This history shapes current perceptions and the political response to new challenges. Consider Ireland, another smaller EU nation. Ireland transformed its economy successfully. It attracted significant foreign investment, especially in high-tech and pharma sectors. This led to strong growth for years. Of course, Ireland's model has downsides, and it's not directly replicable everywhere, but it offers some valuable lessons. Section 5. Stuck in second gear. Why has Portugal's engine sputtered? One major factor is low productivity. Portugal's output per worker lags behind many other advanced economies. This means businesses are less efficient. Several reasons contribute to this. Underinvestment in new technologies, a skills gap in parts of the workforce, and sometimes outdated business practices. Improving productivity is absolutely essential. Without it, sustained growth is hard. Demographics also play a critical role. Portugal has an aging population and one of the lowest birth rates. This means a shrinking workforce and more pressure on pension systems, and also on healthcare services. An older population can mean less dynamism. Fewer young people means fewer entrepreneurs. This is a long-term structural challenge. It requires thoughtful, proactive policies. The reliance on tourism is a double-edged sword. Tourism brought much-needed revenue. It created many jobs, especially quickly, but it also made the economy vulnerable to shocks like pandemics or downturns, and it can lead to low-wage jobs. Over-reliance on one sector is risky. Portugal needs to diversify its economy. Section 6, Charting a New Course. Can Portugal reignite its economic spark? So what can be done now? There are no easy, quick fixes, but several policy directions offer promise. First, a renewed focus on education and on skills development is vital. This means investing in schools and in vocational training programs, ensuring the workforce has modern skills that businesses need to compete globally. Lifelong learning should be encouraged. Promoting innovation and research is key. Portugal needs more homegrown technology and more businesses that create it. This requires government support for R&D, closer links between universities and industry, and an environment that helps startups, simplifying bureaucracy for new firms, providing access to early-stage funding. This can help create higher-value jobs and boost overall economic productivity. Economic diversification must be a priority, moving beyond just tourism and traditional sectors, identifying new areas for growth, such as renewable energy technology, or digital services and software, or advanced manufacturing niches. This requires strategic public investment and incentives for private companies. Section 7, Future Forecast. Storm clouds are clearing skies for Portugal. Portugal stands at an economic crossroads. The stagnation observed in 2025 is real. It presents significant challenges ahead. Ignoring these warning signs would be foolish. The risk of a prolonged slowdown exists. This could lead to social frustration and make existing problems even worse. The path forward requires decisive action and a shared national commitment for change. Complacency is not an option here. However, the situation is not hopeless. Portugal has overcome difficulties before. It has shown resilience and adaptability. The country has many inherent strengths: a skilled, though sometimes underutilized workforce, a strategic geographic location in Europe, and access to EU support mechanisms. These are valuable assets to build upon. The potential for recovery is there. If the right choices are made now, the key will be implementing reforms, structural changes that boost productivity, and that foster innovation and investment. This requires political will and consensus. It also needs societal buy-in. Citizens must see a path to improvement, a future where opportunities expand. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.